All right. This is what we say. It's the favorite time of the week, right? Followed by the favorite time of the month when we get to do stocks to buy tomorrow. I mean, what can I say? Definitely some quality companies here where we talk about earnings and who's going to be making that money. So let's go ahead and get right into it for the companies expected to report earnings on the week of August 3rd. So first and foremost here, you see the Clorox company is on there. Clorox company, obviously most popular for bleach. There's no doubt about it. This is one of the really successful pandemic companies because of the fact that their products are so important right now. They are on the forefront of sanitation and safety, and I can tell you from experience that retail companies have been purchasing their products at record levels. So that's amazing. And not only, you think about Clorox, it's not just bleach that they make, obviously. Every single product they make is on really the focus of sanitation. So, sanitation's massive. That's all I can tell you there. So, Clorox definitely a company to look at for earnings because they should be good. Now, the company's stock is just boring, right? Boring stock doesn't move much, but maybe this is what it takes to make it move. It's been performing well this year, though, I will say that. After them, we have another good pandemic company. It's Tyson, right? Tyson. Obviously well known for chicky products. Chicken. No doubt we love chicken. Obviously frozen and fresh. The fresh has been a rough one to get. There's no doubt. So I do think Tyson falls a little bit when we talk about manufacturing mistakes. There's no doubt. And it's really just because plants shutting down. I mean, that's a majority of the reason for this issue that they found. So the products are being purchased more than ever. There's no doubt. But they're not able to get those products to the actual, why can't I think about real retail companies? Oh my gosh, it's rough. They can't get the products to retail companies because they haven't been able to produce it. They can't produce the fresh. They've definitely been selling the frozen, but the fresh has been a nightmare, really, for every meat production company. Can't lie to you. From Smithfield to, all of it. It's all been rough. So, Tyson always a company to look at, but again, a super boring stock that you don't expect much movement out of regardless of what the earnings say. After them, Global Payments. There's CMS Energy. McKesson. We also have Marathon. Marathon, we think about a lot of stuff with this company. Not one that I expect to really see very good numbers. But, who am I to say? We have MPLX, Cosmos, and Ligand. After Close Tuesday, we got some big ones. There's no doubt about it. Chegg is one of the focuses of today, and we talk about Chegg and what this company does. Really a big focus is on, let's look at these expected earnings. This is a company focused on help for school, books, all of this stuff. It's school focused. And in an environment like this, in which online school is really the dominant and almost only source for some people, Chegg is the lifeline for them, right? Chegg is an absolute lifeline. It's a tutor where they can't get tutors. It's a way for them to get answers where they aren't able to get the answers themselves. It's a way for them to get books at a cheaper rate. So that is where Chegg benefits from this. And I think Chegg is really, really going to benefit from this. And this isn't just a short-term benefit from Chegg, right? This is a long-term benefit as more people decide to not go to physical school. Some people will stick to the online class regimen, and Chegg really likes that because guess what? If you're already online, you might as well use Chegg's services. You might as well. So expect a 32 cents EPS. I can't give you an accurate number as far as EPS is concerned. I can't tell you what they're going to perform as far as that. because I feel like it's a tough one. Sales expected to grow 45%, do 136 million. I think that's a very high expectation. It's not something that I don't think they can beat, but I do think the expectation is very high, especially when we talk about a decent portion of this was over summer months, but maybe not so much. There was one full month of the quarter that was over summer months, in which school wasn't happening at all. And I gotta be honest, I don't know if anyone else noticed this. Anyone who had school in the second half of this, or really not really the second half of the year, but the spring semester, let's say, at least as far as those who are in high school, middle school, non-higher education, they really did not do much. I mean, frankly, they did not do much. Class maybe two days a week, and even that, I don't think there was any assignments really given out even. So I don't think Chegg benefited necessarily this quarter from that as much as I think that they might be anticipating. But I think the following quarters, we should expect some good numbers. 34% expected for the full year in terms of growth. So next year only expected 22%, but I could see it being higher than that. After them, we have Virgin Galactic, definitely a very exciting company for a lot of people, very hot stock, but in my opinion, earnings just don't matter for this company, and I hate to burst anyone's bubble, but earnings are not important for this company. They're not a company that makes revenue at all. That's right. I understand that, making millions of dollars is still better than nothing, but millions of dollars to a company like this, when they're trading at the market cap they are, is just a ridiculous statement. So earnings don't matter for this company. What matters for them is business updates. And if during this earnings call they give business updates, that's what matters. But the actual numbers of the earnings, investors don't give a crap about. Just how it is. Take-Two Interactive after them. Video gaming's been massive and continues to be ridiculously massive. So Take-Two should have a really good quarter, all things considered. Especially when you talk about even in the future, there's benefits too, because they should be producing a football game to compete with EA's Madden within the next few years. I think next year's when they're expected to have it released. So one thing to look at. Ring Central, Solar Edge, KLA, Cirrus Logic. They will obviously, it's a chip maker, Cirrus Logic is. We'll talk about the massive sales from iPhone. Probably benefited this company. You saw from Apple's earnings, iPhone segment crushed expectations. So Cirrus, who makes audio chips for this company, likely sees a benefit as well. But long term, you do want to look at the fact that the iPhone 12 has been delayed. I'm sure they'll mention it and adjust their earnings as expected. 5.9 AIG and realty income, where the focus is going to be on rent, how much rent they received. So the lowest point they got really was around 85% of their tenants paying their rent. And I don't know how this quarter flies for them too. They were able to return to business in June. The past 2 months before June, they were only really returning around 85%. June, I expect better numbers, but the question is on the future of it, as some states are already reclosing down gyms and the like. And realty income does definitely lend out to gyms. I can't speak. So that is one thing to look at as well. So realty income is a really good company, though. Really good company. And the majority of their tenants are ones that are not at all at any risk of any sort of defaulting on any sort of lease or whatever it might be. So I'm not worried about that. Tuesday, we have Ameren, BP, don't like oil company, sorry, CyberArk, Carrio Farm, FIS, Envy, Lending Tree. I hate Lending Tree, but maybe a service that people are using more now as money piles decline a little bit. Ralph Lauren's, definitely a fashion, high quality fashion retail. Don't know how they necessarily perform, but it hasn't been well if you look at previous quarters during the pandemic. So just because, clothing stores were shut down. So that's what happens. We have Lidos and Mallinckrodt. After close Tuesday, there are some good ones as well. We can't lie. Beyond Meat. Beyond Schmeat is what I call it. So, Beyond Meat has definitely a lot of shoes to fill. So they obviously are working on partnerships nonstop. I feel like I'm losing my mind, but they're working on partnerships all over the place, and that's really the future of this company. Is the more partnerships they can get, the better. Not really that many this quarter, I can't lie to you. They haven't really announced many as far as partnerships is concerned, but still, fast food places that they really sell at have been declining sales lately. So I don't know how that. I mean, Beyond Meat, you don't think is going to be benefiting well from that. And in fact, McDonald's, I believe, is no longer going to be continuing the Beyond Meat patty. So again, these aren't high performing items really. They get their money from being purchased by these food companies, not necessarily by those companies selling the product, because a lot of them don't sell it that much. So Beyond Meat, I think the stock will fall eventually because I think the hype will die down. Especially, I mentioned this a lot. The companies that are selling these products that are buying from Beyond Meat, I guarantee you they have the capital to actually invest and make their own product of this that's a lot cheaper than what Beyond Meat's selling. So it's a lot cheaper to make your own in-house brand and a lot more profit in it. And I do think that companies will start doing that once they wisen up, even if they find that it's a market that even matters. If it's not that important of a market, not that large, they're not going to really bother with it, and Beyond Meat might be their continued provider. But after them, Activision Blizzard, expecting big numbers from Activision Blizzard. Obviously Warzone for Call of Duty, probably earning them a lot of money still. A lot of play time, especially in pandemic situations. People are playing games more than ever, as I mentioned. Activision Blizzard should be good. King Mobile, I mean, they have everything going for them. Expect a good quarter out of Activision Blizzard. Walt Disney, you're expecting negative 64 cents. It's a highlight company, obviously. And overall, sales are expected to decline 38%. I do expect them to beat on a revenue perspective, and I think that might be insane to me. So there's a chance they don't, right? There's a chance they don't. But I expect them to beat. Earnings per share, I really don't expect to beat. I don't know. I don't expect to beat on earnings per share. I think revenue would be a slight win. I don't think they're going to really hit by that much. I don't think so. I just don't foresee it. I think there's been a lot of negativity for them. Movie delays. I do think Disney Plus subscriptions will be up massively, and I want to see a report on that, and I think that will be able to drive the stock up, even if this quarter's numbers look bad, which they will look bad no matter what. But I think Disney Plus is the focus of investors in this type of market, so I'm interested to see what exactly that looks like. But overall for the year, only expect to decline sales 4%. Seems insane. So that's Walt Disney. Expect good. I mean, I'm really anticipating this earnings. We have Twilio, Enphase Energy, Nikola Corporation, the biggest pump and dump scheme of all time. Not really, but it is one of them. So I don't even bother looking at these earnings because they don't make money. They're literally just a concept company. So I don't even know why this is on the most anticipated earnings, because it's not. Sorry, I don't mean to hate on the hype companies. I'm sorry. We have Wynn Resorts. Probably very bad numbers coming from Wynn, I'll tell you that. Paycom, Upwork, and Glue Mobile. Wednesday, before open, we have Moderna, CVS Health, both companies focused on health. What a shocker. Wayfair after them. Obviously, big scandal with Wayfair right now. But besides that, Wayfair's one to look at because it's been growing sales massively, and I think will continue to grow sales massively as the online environment just poses a lot of benefit for sales. I mean, there's a lot of money to be made on online shopping, So companies will continue to do it. So how about after that, Tiva, then Fiverr. Fiverr, I didn't know if it was a company that was still around. I haven't heard about Fiverr in a while, so I'm interested to look at the earnings just to see exactly what's going on with this company. Do people still use the service? I don't know. Then Humana, a lot of healthcare companies today. Regeneron, a lot of health companies. What can I say? Callan Petroleum Company, Advanced Energy, and Wendy's sneaking down there with their spicy nuggets. Now, here's the thing about Wendy's. The food's always cold, and you can't tell me it's not. McDonald's ice cream machine's always broken. Wendy's microwave's always broken. How do they give me cold food every time? I still like the spicy nuggets, even when they're room temperature. I mean, come on now. After close, we have Square. Definitely another focus stock. As they lose really the benefit of all the small businesses that work through Square, they're still expected to see some good sales here, $1.13 billion, but EPS is expected to decline to negative 5 cents. Square is going to have to transition to a lot of digital sales right now because a lot of these small businesses that use Square aren't going to be in business. So definitely some interesting stuff to look at for Square as they kind of transform for the time being, and I'm sure they'll return back to their normal Square reader future in the future. So Square's still a really good company though, and it's very future focused, and will do super well in the future. But I think the time right now is where you got to really reevaluate the company and see how it's transitioning in this current environment. Roku, really companies I don't like the valuation on, but it's been growing revenue rapidly, and I'd like to see it continue, and I think it will in pandemic environments. Guess what? They benefit from lockdowns, so good for them. There's Fastly, then Etsy. Same thing with Wayfair. Expect massive revenue growth for this company. General merchandising volume should grow massively year over year as far as what people are selling on the platform. So expect really good numbers from Etsy. We have Zynga, mobile game producer, Western Digital, good chip company, no doubt. Microvision, Inseego, really focused on 5G, and as we see more delays really in the process, and 5G is giving us the Rona. We all know it is. Come on now, those 5G towers are giving us Rona. I can't even. Oh gosh, I can't even joke around that. It's funny. People think it's real. Energy Transfer. Then Sonos, which makes really cool speakers, by the way. Sonos is a company you should look at if you don't know about them. They make really cool speakers. Definitely a future-focused company, no doubt, but not an exciting one right now for me. Thursday, we have Mercado Libre. Plug Power, which I'm looking for them to drop, all right? Since I sold my stake, I'm looking for them to drop under really right around the $6 range. I want it to be around $6 and I'll buy back in. But I don't think these earnings are going to be really beautiful for the company because I don't think they've seen a lot of their material benefit quite yet. We're still talking about their benefits coming down, next year, the year following. So I think maybe in the short term we may see a downward movement, which I'll buy back in if that's the case. Then we have Bristol Myers Squibb, Wix.com. Another benefit with Wayfair and Etsy. I'll partner them in that group. We have Kronos Group. These companies have been losing money hand over fist, these Mary Jane companies, so don't expect good numbers. We have Ecorpio, Norwegian Cruise Lines, probably going to see an 80% decline in revenue, I assume. Yikes. Papa John's and Fleer. After close, we have Livongo. Cloudflare is a beautiful company, very beautiful company. We'll probably look at those earnings. Very focused on the future. I mean, this is a future company if you've ever seen it. So definitely look at Cloudflare earnings. Should expect good numbers from them. Dropbox, Datadog. What can I say? This is a week full of future-proof companies. Datadog is one of those really good company. Really good company. So I'll be looking at those earnings as well. Uber. I hate Uber. I do because they lose money just so freaking much. They lose so much money. I hate it. But, oh gosh. Uber's going to lose billions of dollars again probably. What a shocker. Probably only $1 billion this time, but they could beat, but just not a really good environment for Uber. Ride sharing is not good in the middle of a infectious disease because people don't want to share a ride with someone. They don't want to go in their car. Just how it is. We have the Trade Desk, T-Mobile, Alteryx, Fortinet, and Booking Holdings probably going to see bad numbers. Just going to tell you that. And Friday we have Arbitus, Virtue Finance, Noble Energy, International Segways Incorporated, Canadian Solar, Meridian, Noble, Midstream Partners, Construction Partners Incorporated, Ventas, and Magna. Okay, this week's stacked. It's stacked week, and I'll try to do my best to produce as many videos as I can. A lot of work going on this week, but I'll do my best to produce as many videos as I can and bring out of stocks to buy for you. So I hope you enjoyed.